So let's talk about something we've all been through. And if you haven't, I envy you. What I'm talking about is the roller coaster of emotions you have when your money's on the line. Letting your feelings call the shots on when to buy or sell can lead to disaster. But tuning into the overall vibe of other folks in the market, that can give you some valuable insight. Today we're going to look into where retail traders are landing on the emotional scale. If you're new here, I'm Privacy Smurf, the mind behind Zinalytic Trading. My mission is twofold: to deliver objective analytical content and to educate on systematic trading strategies. If you're unfamiliar with retail sentiment or the Fear and Greed Index, I'll have a video on this soon, but for now you can check out the link in the description for my written post on this topic. Let's go ahead and take a look at where things are after the week ending Friday, August 2nd, 2024. Only the S&P chart is notable this week. We'll go over the other charts first, but there's not much in terms of forward-looking analysis since we're waiting for extreme readings. Safety assets like gold and the 30-year bonds have bullish sentiment, and both are near the greed zone. I'll be waiting and watching for a further increase in the coming weeks to create the conditions for a bearish trade signal. Then the growth assets like the S&P and Bitcoin have bearish sentiment but aren't yet near the extremes. The US dollar index, also known as the DXY, is highly bearish. I'll be watching this one for a further decrease in the coming weeks to see if it can create a bullish trade signal. If the DXY does decline further into the fear zone, that action will sort of be tied to the analysis that we have coming up on the S&P. The last sentiment video that I released was at the end of June, and the underlying takeaway was that we were at a top with regard to the S&P. Since then, there's been a final rally both in price and sentiment before 3 straight weeks of strong bearish action. In the video, I provided levels that I was targeting to the downside. The initial daily targets at 53.75 have been hit. Additionally, a secondary signal has also been triggered, targeting 52.70 and 50.15. The original weekly targets from the earlier video are still in play, and just like the daily chart, a secondary signal has also been triggered to the downside. This pairing of targets creates a zone centered around 52.30 and 50.15. When I overlay the daily and weekly targets, a couple of notable areas appear. For a short-term focus, the confluence of both timeframes at the 52.50 to 52.90 area may provide support. I'd be watching on an intraday time frame for price to trade into this level to look for a sign of a bounce. Something like the 2-hour time frame might be relevant. For a longer horizon, when or if we trade down into the lower levels, the confluence from both time frames at 5,000 to 5,030 may provide some support. I'd most likely be watching the daily chart for signs of a bounce at this area, but it's possible intraday time frames, something around or above the 4 to 8 hour, would be irrelevant. My open positions that were started in May trailed out around mid-July, so now I'm just waiting for new bullish exposure. I really don't think we're done with the bull market yet. As I said in the last video, we have been here before. The prior bull market, there were sentiment warnings that led to a weekly trigger around this time, and those were invalidated before a second set of warnings and triggers came in later in the year, which ended up being the eventual peak. In the image on the screen, the yellow vertical lines are sentiment warnings, with the red vertical lines being bearish trade signals. If we're in the same sort of setup as the prior bull market, I've highlighted where I would expect the secondary set of warnings and triggers to come into play. The bearish targets being hit is a testament to the power of this type of analysis and execution. It's always validating to me to see the system produce the anticipated outcomes, even when everything inside me feels completely opposite. Trading systematically is not infallible, and it does produce losses, but it provides clear insights into your reasoning process when you're analyzing the trade's outcome. Over time, your evaluation enables you to refine the process and enhance your performance based on the specific trends across all of your trades. If you haven't done so yet, join the Discord from the link in the description. Instead of getting these weekly updates, you can see the daily sentiment levels, and we can talk about any questions you might have about the strategies or execution. Otherwise, I'll see you next week.